Ever heard of a company that not only keeps workplaces running smoothly, but also helps businesses connect with customers globally?
All while quietly becoming a financial
Yeah.
powerhouse.
Get ready to meet Updater Services Ltd. Or UDS.
UDS.
You sent over a really interesting collection of materials for this deep dive. Analyst questions about their Q2 FY25 results,
Uh-huh.
the unaudited financials, both standalone and consolidated,
Okay.
and even a press release with an investor presentation.
Wow.
So today, let's unpack what these numbers really mean for UDS's future.
What's fascinating here is how UDS has managed to fly under the radar for so long. Most people, know them for integrated facility management or
Like
IFM.
keeping the lights on and
Yeah,
coffee man.
exactly. But what's really caught my eye is their expansion into business support services, or BSS.
Okay.
Through a series of strategic acquisitions, they've become a major player in areas like sales enablement,
Wow.
background checks,
Mm.
even airport ground handling. They're building a whole ecosystem of business solutions.
Okay, so they're not just about clean offices anymore. This is starting to sound like a business services empire in the making.
That's a great way to put it. And their financial performance certainly reflects this ambition. Let's start with the top line. Consolidated revenue hit a whopping 13,456 million,
Wow.
a 14% jump year over year.
That's impressive growth,
Yeah.
especially in today's economic climate. Is this mostly driven by those new BSS acquisitions, or is their traditional IFM business holding its own?
Both are playing a role, but the BSS segment is the real standout here. Their first half FY25 results show a 27% growth in BSS revenue.
Hmm.
That's massive. It shows their strategy of diversifying beyond IFM is really paying off.
So they're not putting all their eggs in one basket.
Hmm.
Smart move. But revenue is only part of the story, right?
Yeah.
What about their profitability? Are they actually making money from all this expansion?
Here's where it gets really interesting. Their consolidated profit after tax, or PAA, stands at 536 million,
Okay.
a staggering 149% increase year over year.
Wow. That's not just growth, that's a profit explosion. What's fueling those impressive margins?
A few things. On the IFM side, revenue is up a steady 10% quarter over quarter. And it looks like they've been strategically implementing technology to optimize costs, which always helps the bottom line.
Right.
But again, BSS is the star of the show, with revenue jumping 20% quarter over quarter.
Hmm.
One of their subsidiaries, Denave, which specializes in sales enablement, is making waves with its AI-driven sales intelligence platform. They're clearly ahead of the curve in using technology to deliver business solutions.
The investor presentation mentioned quite a few other acquisitions too.
Yeah.
Matrix, Athena BPO.
Uh-huh.
Are these all contributing to this BSS boom?
Absolutely. Each acquisition adds a new layer to their capabilities. They've got Matrix for auditing and background checks, Athena BPO for sales enablement. They're clearly on a mission to become a one-stop shop for businesses.
It's a bold strategy. Let's shift gears for a moment and talk about their people.
Uh-huh.
UDS has a massive workforce,
Yeah.
over 68,000 employees.
Wow.
That's practically a small city.
Uh-huh.
And according to their investor presentation, they've managed to maintain an incredible 95% retention rate in IFM and 93% in BSS over a 5-year period.
That's unheard of in an industry known for high turnover. Those numbers are a testament to their ability to create a positive work environment and cultivate employee loyalty.
It makes you wonder what their secret is. So we've established that UDS is growing rapidly and turning a tidy profit. But how sustainable is this success? What does the broader market landscape look like for them?
Well, the outlook is quite promising. The outsourced IFM market in India is projected to grow at a 17% CAGR through FY28, and UDS is already the second largest player in this space.
And what about BSS? Is there enough room for them to grow in that market, given how competitive it already is?
Here's the thing. The BSS market is also expected to see robust growth, projected at a 15.3% CAGR during the same timeframe. And UDS, with its diverse BSS portfolio, is well-positioned to grab a significant share of that pie.
So UDS is riding a wave of favorable industry trends and seem to be making all the right moves. What are some key takeaways from this initial look at their business?
First, UDS is definitely a company to watch. Their financial performance is stellar, and their strategic moves show they're playing the long game. Second, forget the stereotype of just cleaning offices. UDS is evolving into a comprehensive business solutions provider. And finally, their success story highlights a larger trend, the booming demand for outsourced business services in India.
All right, we've got a good overview of who UDS is and what they do. Now let's roll up our sleeves and dive into their financials for a closer look at their performance.
Welcome back to our deep dive into UDS. Now that we've got a feel for their overall business, let's put on our analyst hats
Okay.
and dissect their financial performance a bit further.
Right, time to get into the nitty-gritty. We've seen they're generating impressive revenue and profit, but how can we tell if those numbers are truly healthy, sustainable?
Yeah,
What should we be looking for?
that's where financial ratios come in. They help us assess different aspects of UDS's financial health, like their profitability, efficiency, ability to handle debt. Think of it as a financial checkup, comparing their vitals to industry benchmarks.
So like a doctor checking our blood pressure and cholesterol level.
Exactly.
Give me the financial equivalent of a clean bill of health for UDS.
All right, let's start with their profitability ratios.
Okay.
These tell us how effectively they're turning revenue into profit.
Right.
One key ratio is the gross profit margin. It shows us the percentage of revenue left after deducting the direct costs of providing their services. Think of it as their markup, how much money they make on each rupee of service they deliver.
Got it. So a higher gross profit margin means they're keeping more of their revenue after paying for those direct costs. What's UDS's gross profit margin looking like?
It's been hovering around 16% for the past couple of years, which is generally considered healthy. It suggests they have decent pricing power and are managing those direct costs efficiently.
That's good news. But revenue and gross profit are just the beginning. What about their operating expenses? All those costs associated with running the business, like salaries, rent, marketing.
Right.
How can we assess their ability to control those expenses?
That's where their operating profit margin, or EBIT margin, comes in.
Okay.
This ratio measures the percentage of revenue left after deducting all those operating expenses but before accounting for interest and taxes. It gives us a clearer picture of the core profitability of their operations.
So a higher EBIT margin means they're running a tighter ship, keeping those operating expenses in check.
Yeah.
But what's the verdict on UDS?
Their EBIT margin has been around 4%, which again is a decent figure. It shows they're not letting those operating expenses eat into their profits too much.
All right, so their margins are looking good,
Yeah.
but ultimately what matters is their bottom line, right? What's their net profit margin? The percentage of revenue that actually turns into profit after accounting for everything?
You're right. That's the ultimate measure of profitability.
Right.
And UDS has seen some interesting fluctuations in their net profit margin over the past few years.
Okay.
It took a bit of a dip in FY23, but rebounded to 2.7% in FY24.
Why the drop and subsequent rebound? Is that something to be concerned about?
It's hard to say without more detail.
Right.
They could have incurred some one-time expenses or had some investments that temporarily impacted their profitability. The important thing is they seem to have bounced back.
Okay, so their profitability metrics are generally positive. But what about their ability to manage their debts and meet their financial obligations? That's got to be a major concern for any growing business.
Absolutely. That's where solvency ratios come in.
Okay.
One key ratio is the debt-to-equity ratio, which tells us how much debt they're using to finance their assets compared to how much is funded by their own equity.
Right.
A high debt-to-equity ratio can be risky, but a low one suggests a more conservative, stable approach.
So where does UDS fall on this debt spectrum? Are they playing it safe or leveraging themselves up?
Remember how we mentioned earlier that UDS is a net cash company?
Well, that translates to a negative debt-to-equity ratio, meaning they have more cash on hand than debt. This is incredibly rare and suggests exceptional financial strength.
Wow, that's a phenomenal position to be in. It sounds like they have a lot of financial flexibility to pursue growth opportunities. But even with a strong balance sheet, managing cash flow is crucial for any business, especially one expanding as rapidly as UDS.
Yeah.
How can we assess their ability to keep the cash flowing?
That's where liquidity ratios come in.
Okay.
They measure a company's ability to meet its short-term obligations using its most liquid assets. Things like cash, accounts receivable, short-term investments.
Right.
One of the most common liquidity ratios is the current ratio. It tells us if a company has enough current assets to cover its current liabilities.
So a higher current ratio means they're in a better position to pay their bills on time.
Exactly. A current ratio of 2 or higher is generally considered a sign of good liquidity. UDS's current ratio has been steadily improving and sits at 1.75.
While that's not quite at that 2.1 benchmark, it's still a positive trend, showing they're strengthening their ability to manage those short-term financial demands. What other liquidity measures should we be looking at?
Another important one is the quick ratio, also known as the acid test ratio. It's similar to the current ratio, but it excludes inventory from current assets,
All right.
giving us a more conservative view of their liquidity. Why? Because inventory can sometimes be difficult to convert to cash quickly.
So it's like a worst-case scenario test for their ability to meet those short-term obligations?
Yeah.
How does UDS measure up?
Their quick ratio is 1.38, again
Okay.
showing a positive trend and suggesting they have sufficient liquid assets to handle their short-term debts.
Okay, so their profitability, solvency, and liquidity metrics all paint a pretty positive picture of their financial health. But what about their efficiency? How effectively are they using their assets to generate revenue and manage their working capital?
That's where efficiency ratios come in. One key efficiency ratio is the asset turnover ratio. It measures how efficiently they're using their assets to generate revenue.
Right.
A higher asset turnover ratio generally indicates better efficiency.
So if their asset turnover ratio is high, it means they're squeezing more revenue out of their existing assets, right?
Exactly.
Like getting more miles per gallon out of their business engine.
That's a great way to put it. And UDS's asset turnover ratio has been consistently above 1.5, which suggests they're managing their assets well and generating a good amount of revenue from them.
That's encouraging. What other efficiency measures are relevant for a business like UDS?
Since UDS primarily provides services, their inventory levels are likely quite low, so inventory turnover isn't as relevant.
Okay.
However, we can look at their receivables turnover ratio, which tells us how quickly they're collecting payments from their customers.
So a higher receivables turnover ratio means they're not letting those invoices pile up, they're getting paid promptly.
You got it. And UDS has a healthy receivables turnover ratio, indicating they have good credit and collection practices. This helps them maintain a healthy cash flow and avoid potential issues down the road.
Okay, so we've covered a lot of ground here, analyzing UDS from various financial angles.
Mm-hmm.
What's the overall takeaway from this deep dive into their numbers?
Based on this analysis, UDS appears to be a financially well-managed company
Yeah.
with strong profitability, excellent solvency, and healthy liquidity. They're efficient in managing their assets and generating revenue, and they seem to have a good handle on their working capital.
It's a relief to see those impressive revenue and profit numbers are backed up by solid financial fundamentals. But, as with any investment, we need to look beyond the numbers and consider the broader context. Let's shift gears now and delve into the analyst questions you provided. These questions offer a valuable glimpse into the specific areas that industry experts and investors are focusing on. We've crunched the numbers, we've analyzed the ratios, and it's clear UDS is firing on all cylinders financially. But numbers only tell part of the story. In this final part of our deep dive, let's zoom out and look at the bigger picture. What are the opportunities and risks that lie ahead for UDS, and what does their success tell us about the future of business services, especially in India?
You're absolutely right. To truly understand UDS's potential, we need to look beyond their current performance and consider the broader market dynamics.
Okay, so let's start with the opportunities. We've already established that UDS is operating in a sweet spot. Both IFM and BSS are projected to grow significantly in the coming years. What are some specific avenues for them to capitalize on this growth?
One exciting area is their continued expansion into the BSS market. Remember, they've already made some bold moves with acquisitions like Denavi and Matrix. But there's still so much room for them to grow in this space.
So they could potentially acquire even more companies or develop new BSS offerings.
Exactly. The BSS market is quite fragmented, with lots of smaller players. UDS has the financial muscle and expertise to consolidate this market and become a true powerhouse.
And remember, they've got that impressive track record of integrating acquired companies and making them work seamlessly within their existing structure.
Right. But acquisitions are only one piece of the puzzle. They can also deepen their penetration in existing markets by cross-selling services to their current clients. Why not offer a client who's already using their IFM services a package deal that includes sales enablement or background checks?
It's a brilliant strategy. They already have those strong relationships in place, so it makes sense to offer a wider range of solutions.
And let's not forget the power of technology. UDS has already demonstrated their commitment to leveraging technology like AI and automation to enhance their services and create a competitive edge. Imagine the possibilities as they continue to innovate and develop cutting-edge solutions.
It's exciting to think about what they could achieve. But of course, no business is without its risks. What potential challenges should we be keeping an eye on as UDS continues on this ambitious growth trajectory?
One word: integration. They've been on a bit of an acquisition spree, and while they've handled it well so far, effectively integrating all those different companies, cultures, and systems is a massive undertaking. It's something they'll need to manage very carefully to avoid potential disruptions.
It's like trying to blend a bunch of different ingredients into a smooth, delicious recipe. Too much of one ingredient or not enough mixing, and the whole thing could fall apart.
That's a great analogy. Another challenge they face is competition. Both the IFM and BSS markets are getting increasingly crowded. With new players constantly emerging, UDS will need to stay agile and innovative to maintain their market share and fend off rivals.
And as they expand into new service areas, they'll be going head-to-head with established players who already have a foothold in those markets. It's not going to be a walk in the park.
Absolutely. They'll need to play their cards right and leverage their strengths, things like their extensive network, strong customer relationships, and technological prowess to carve out their space.
And let's not forget the unpredictable nature of the global economy. Any major economic downturn could significantly impact their business, especially since they serve clients across a wide range of sectors.
That's right. Economic volatility is always a wild card.
Okay, so we've got a good grasp of the opportunities and risks facing UDS. But stepping back even further, what does their success story tell us about the bigger picture? What does it reveal about the evolving landscape of business services in India?
UDS's journey is a prime example of a larger trend. The increasing demand for specialized, outsourced business services, not just in India, but globally. Companies are realizing that they don't need to do everything in-house. It often makes more sense to focus on their core competencies and outsource other functions to experts.
It's like a homeowner deciding to hire a plumber instead of trying to fix a leaky faucet themselves. Sometimes it's just more efficient and cost-effective to call in the professionals.
Exactly. And this trend is only going to accelerate as businesses face increasing pressure to optimize costs, streamline operations, and adapt to a rapidly changing world.
So UDS is riding the crest of a wave that's only going to get bigger. They're in the right place at the right time, with the right mix of services and the right approach to growth. It's an exciting story to follow, and it will be fascinating to see how they navigate the challenges and opportunities that lie ahead.
Absolutely. UDS is a company worth keeping on your radar. Their story highlights the dynamic and evolving nature of business services, and it's a testament to the power of adaptability, innovation, and strategic vision.
Well said. And that brings our deep dive into Updater Services Ltd to a close. We've unpacked their financials, analyzed their strategies, and explored the broader implications of their success. But as always, there's always more to learn.
We encourage you to continue your research, stay informed about their progress, and draw your own conclusions about their future. Until next time, keep those curious minds engaged.